Folks, inflation has crashed. Yes, inflation has crashed. Man, we got a lot to get into in this video. It's going to be a busy one, folks. So many different subjects to cover. We got people saying this time it's not different. We're about to have an epic crash in the stock market, right? We've got a lot to get into in this one here today, folks. So I just kind of want to dive straight into it because it's going to be a busy video, a lot of subjects, a lot of stuff I have prepped for you guys. Look at all this, baby. We got a lot to go through here in this one, folks. So appreciate you. This is Trueflation you're looking at. By the way, thank you everybody that subscribed to the channel. I appreciate you all. Thank you everybody that's part of the Smash Club. I appreciate you, okay? This is Trueflation, what we're looking at here, okay? And Trueflation, in my opinion, is the most realistic gauge, in my personal opinion, of what's going on with inflation or deflation in the economy, right? And we pretty much always have inflation, so it's really in relation to inflation, right? And if you go back to last year, right? Trueflation had us at an inflation rate at over 12% at one point last year, which if you ask a lot of market participants, a lot of them feel like we were in double digits inflations for part of 2022, right? And so I've always felt like this is a little better gauge, in my personal opinion, of what's going on with inflation. They currently have us at 4.2%. That's real inflation as of today, okay? And I mean, you look at this and it has been a straight crash in terms of what's going on with inflation here, okay? Trueflation, historically, government inflation metrics have produced biased outputs, which is, I'll be honest, you ask anybody that knows anything about the economy, anybody that knows anything about government numbers, the stock market, anything, and they do feel like they're biased outputs in terms of what the government feeds you for data, okay? Built on outdated methodologies. They lacked modern measurement techniques, provided limited levels of transparency, and only updated monthly. Trueflation delivers a new inflation truth set built on 10 million plus data points, updating basically daily, not monthly. The methodology is transparent, dynamically adjusts to global market conditions, right? In terms of their methodology, they 15% food and non-alcoholic beverages, so food and drink basically. Housing's 23%, transportation's around 20%, and then it kind of goes down from there in terms of, you know, the biggest inputs for what's going on with their inflation. So the fact is, inflation is crashing right now, right? Are we back to the numbers we need to be at, which is under 3% for those that are keeping track at home? No. But the question is, okay, and I'll answer this right now, are we on a path to be in the threes by this summer? In my opinion of that is yes, absolutely. And I believe even the government numbers, which are not, in my opinion, the best way to look at inflation, but even in my opinion, the government numbers, CPI, will be in the threes this summer, okay? That's my personal opinion. Looking at everything I look at, we'll see if it plays out. But that's where we're headed here in this whole situation when it comes to inflation. And I don't think it's being looked at enough, but it will be over the next few months. I think inflation's kind of taken a little back step here because obviously the banking crisis, you got everything that's going on with the economy and all that dynamic. So that's really what's taking the attention. Inflation's kind of moving a little more back page. And I'm telling you, if the last CPI numbers, this was shocking, folks. The last CPI numbers, when it came out, I woke up, you know, it was Tuesday, and I looked on CNBC app. Couldn't even find the CPI numbers. Like, there was always, like, top page news on CNBC. I went to the website, same exact thing. I had to actually Google what the CPI numbers were and actually go to the government website. I was like, are you flipping flapjack and kidding me? Like, this was, like, always, like, the top news story. Oh, the CPI. And then all of a sudden now it's like no one's talking about it. I'm like, okay, well, this is interesting, okay? This is a tweet I saw, the game of trades, okay? They say this time is not different, right? They're saying we're about to have an epic crash. Imminent is what they're saying, okay? Now, these folks make so many predictions, I can't tell, you know, how many are right or how many is wrong. Like, you know, it's always this and always that, right? But in regards to this, it's interesting, right? Because you see this and you're like, oh my gosh, yep. You see 1973, you see 2008, you're like, yes, this has to be massive crash ahead, right? But, you know, this was a great thing that was done this summer, right? And you can always look at these charts, and you can always pull up different time periods in the past, and you can find correlations that are bullish, and you can find correlations that are bearish throughout every single market. And so this doesn't mean this is wrong. This doesn't mean this is right or wrong or anything like that. It's just like, it means nothing. And that's the best way to put it. It means absolutely nothing, because I could cherry pick all these different time periods and go back to the time periods and look at this and look at that. And if you want to be bullish, I can show you bullish scenarios. If you want to be bearish, I can show you bearish scenarios. And so at the end of the day, it means absolutely nothing, right? And this was an interesting tweet somebody said. They said, yes, a sample size of 2 is good enough to predict a third event. Great statistical value in it. And yeah. That's like flipping a coin, flip a coin, okay, in regards to that. So you guys are going to see a lot of that over time. You've probably seen a lot of that over the past, I would say, 12 to 18 months specifically. You're going to see more of it, and just understand it means nothing. It literally means nothing. It might be right, it might be wrong, but it's more than likely every single time people are making predictions, it's usually wrong in regards to short-term movements in the stock market. The high majority of the time, it is inaccurate and it is wrong, okay? People get jacked up about it, and then they go load up on put options, and they lose a bunch of money, and they're like, oh my gosh, okay? This is fascinating, okay? O-Man put this in the private stock group. This is going to crack you up. By the way, if you don't know O-Man, he's basically, if you're ever looking to join my private stock group, my private wealth group, he's the one you have to speak to, and he kind of vets everybody to see, who's a good fit and who's not in terms of that, right? And by the way, if you ever want to speak with him and see if you're a good fit, that's in the description area if you're looking to apply to join us in there, okay? But this is fascinating, right? UBS calls it an acquisition. Credit Suisse calls it a merger, right? UBS, in terms of this, right? UBS to acquire Credit Suisse. Credit Suisse, from their standpoint, Credit Suisse and UBS to merge. Isn't that funny how that works, man? One company calls it one thing, the company calls it the other thing, right? No, I don't know if you guys have seen the details of this, but this is extremely fascinating in regards to this deal, okay? UBS is to pay 3 billion Swiss francs, so $3.2 billion roughly for Credit Suisse, right? Janet Yellen, and Jerome Powell both welcome the deal to support financial stability. UBS is to assume up to $5.4 billion in losses, deal to close this year. Credit Suisse rates down $17 billion of bonds to zero. I'm talking zero, like Robert De Niro back when he was in Last Action Hero. He was never in that movie, okay? Angering holders, yeah. I'm not surprised they're angry. I'll put it like that, okay? But look a little deeper, okay? Look a little deeper and you'll find this, right? The Swiss Central Bank said Sunday's deal includes $108 billion in liquidity assistance for UBS and Credit Suisse. I call that a sweetheart deal. That is a sweetheart deal if I ever heard one, okay? And it looks to me in this situation, UBS is going to make out like a bandit, because the government's going to Band-Aid whatever they got to. If they have to Band-Aid anything, they're there for it. $108 billion? Are you flipping, flapjacking, kidding me? And now UBS obviously gets all those assets from Credit Suisse. They get to do a bunch of write-offs here. This is a sweetheart deal for UBS. I mean, just to be honest, this is what happened in the Great Financial Crisis when it comes to these big banks. This is exactly what happened, where the big dogs got bigger. They got these sweetheart deals. They got to pick up smaller banks and smaller financial institutions for pennies on the dollar. Pennies on the dollar. Absolutely magnificent. And next thing you know, boom, 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 things come back to life, and that big bank is bigger than you ever seen before, and even more dominant, right? And yeah, it's quite interesting, right?